Hey traders, this is Blake Morrow with Traders Summit. And you know what? I have a very special guest today. She's going to be talking about sentiment and the markets in general and where we currently sit. I want to bring in Miss Helene Meisler with Prothestreet. Helene, it's been so long since you and I have had a one-on-one discussion. Great to see you.
Nice to see you too, Blake.
Before we hit record and we were chatting a little bit, we were just discussing kind of the markets that we've seen, and yeah, I've been in the markets for a few decades now, going on three, almost at my third decade in the markets, and I know you've been trading and being in the markets even longer than that. And where we currently sit right now, to me, it's hard for me to go, are we in a bubble? Is it like a dot-com bubble? And I wanted to ask you, based on your experience and the years you've been in the markets, the years you've been a participant, a trader, where do you see the market right now, where we currently sit? And does it remind you of any market that you've seen in the past?
Oh, wow. Okay. So I would say there are aspects of the market that remind me of um, the late 90s, but it doesn't feel really like the late 90s for a lot of reasons. Um, we have in the late 90s, you had speculation that was just out of control. And you had stocks going up 20, 30, 40% a day, stocks that didn't make any money, just all they had to do was add a .com to their name.
Sure.
And and we don't really have that now. We have pockets of that where, you'll get a handful of stocks that do that. So as I'm fond of saying, what we got in the fall was all the crypto garbage ran, and anything that was related to crypto became speculation heaven. And then that subsided. And then we got, I'm going to forget a few of them, but, then we got all the quantum stuff just started running. And so we keep getting little pockets. It's not an all-encompassing bubble, if you will, the way it was then. And at the same time, we have a whole bunch of stocks nobody even wants to look at. And in that respect, it's somewhat similar to the late 90s, because in the late 90s, nobody cared about stocks like Procter and Gamble and Unilever and Colgate and any of those stocks that weren't hot tech stocks. So
Sure.
we have a little bit of that, but I think we also have a different dynamic going on here. And that is, we have people, let's just call them 60 plus years old. They lived through the .com blow up. They lived through 2008.
Yep.
They're not sure they want to live through another big correction. And so I think what you get is everybody got very excited about the American Association of Individual Investors, the AAII numbers, because it keeps showing more bears than bulls. But I keep reminding everyone, that's old people. I think if you had a similar survey for people 50 and under, you'd get a totally different answer
Sure.
on your survey. And I'm not sure that we've ever seen that kind of bifurcation in sentiment before.
So when you I know exactly what you're talking about. It's like those. I mean, I'm over 50, so I remember the things that a lot of people don't want to remember, and I'm different from, a lot of the traders that are on the street right now that have been in the markets for 10 or 15 years. So we do have that bifurcation. But we also have like this leadership in the market too, which has been AI driven, or, Mag
Mhm.
7, or however you want to look at it. Um, do you see the market shifting a little bit? And by the way, I know you
Yeah.
brought a presentation. I can't wait to see it, and I know our viewers can't wait to see it either. But just so, as far as the leadership that we've seen in last year and a half, probably since I've talked to you, really, it's just
Yeah.
kind of blown out of the water. How does that make you feel?
What changed in 2024 that people have only just started to pick up on, but the change started probably close to mid-year, was the Mag 7 started to diverge amongst themselves. If you take a look at a chart of Microsoft, it is the same price it was a year ago. Can you call that a Magnificent Seven stock if it's the same price it was a year ago? I
Sure.
don't think so.
Right.
You take a look at Apple. Apple had that big run, but it just sits there. Amazon is still near the high. Meta is near the high. Google also well off its high. Netflix is near the high. In other words, there's just been such a vast divergence among the 7 leadership, even if it's 10 stocks that were leading. Nvidia, still the same price it was last June. There's just a lot of that going on. So I was always taught that the market's way of changing leadership is to have a correction. And these last several months, since November, the market has gone absolutely nowhere. And please don't tell me we were at 5,800 and now we're at 6,000, because the reality is if you look at a chart, it's up, down, up, down, up, down. It is literally a giant chop fest for the last several months. And within that chop fest, we have had, the speculative bubble in crypto, quantum, AI. It keeps moving. The speculation just keeps moving. And so I think in that respect, that's quite unique in that we've had a market that's gone sideways for so long. And the only other market I can think of that had a similar type of sideways action was, but we're in a different place in the market. But after the 2000 high in the spring, market came down, tried to recover. A lot of people probably don't know, but we actually made the high in the S&P. We came back to the high in the fall of 2000 in the S&P, not NASDAQ. And we were mostly, up and down, a lot of up and down, up and down, up and down. And then in the fall of 2001, 9/11 came. And we had that big plunge. We closed the markets for 4 days. And afterwards, we had a plunge for another week, and then we recovered. And that recovery after that plunge kind of stopped around November. And from November through March, we were in a 10% range. The market did a lot of this, that, this, that, this, that. And then in early March, then President Bush, George W. Bush, instituted steel tariffs to take place in late March. So he announced them and then they went on. And I don't know if that was the reason, but if you go back and you look, you can see we fell right out of that 10% range in late March. And we never looked back. And we were literally in a downward market, steadily downward, until we had a plunge in late July that ended it.
Well,
so that's the only, if you will, analogy I can find where we've had a market that kind of topped in November, and then did this into the spring of the following year.
And ironically, here we are on the eve, maybe a week away from some serious tariffs hitting Mexico and Canada. So, you're as we all know as market participants, history doesn't always repeat itself, but it does rhyme a little bit from time to time. So, Helene, it's really now I'm very interested to see the presentation that you brought, because I know you're going to talk about some things that probably have your attention regarding sentiment and positioning. So what did you bring for us today?
So I brought, here we go. So I am watching, and this is a little unique for me, okay? Instead of looking at the indicators right now,
and by the way, I'm sorry, I hate to interrupt. I don't see your screen just yet in case you were trying to share. So,
okay, hold on.
I'll let you know when I see your screen.
All right, let me go back.
Yeah.
To share. And stay with me.
Oh, we're here.
Stay with me.
We're waiting.
Okay.
We're all waiting.
You're all waiting.
And there
we go.
Comes. There it is. And then, yep. And then,
okay. All right. So
there we go.
What I am watching is, first of all, the home builders look terrible, right?
Yeah.
But I mean, and I have not a ton, but I have a lot of stocks that are down like this. But if you think about how bad the news is in homie land here, and we just can't break. We broke 100 last week on the toll earnings, but we just cannot break that July low. They tried this morning. It was a weak sauce try.
Yeah.
Okay. So to go back to your comment earlier about 1999, or is it similar to .com? What I'm looking is, can we break these stocks down? These groups that keep threatening and threatening and threatening, and then they don't do anything.
Yeah.
And then they just sit there, okay? Or they rally. So let me show you the semiconductors. The semiconductors have been sideways since September last year. In fact, the SOX index is trading where it was in March of last year. So much for all that great technology, right?
Sure.
And so, but you can see down here how many times they kept trying to break it, and what happens? It rallies. It fills the gap and comes down. Nowhere. We are in, it is literally a chop fest. Okay? IWM, the small caps, the Russell. Here too, we're trading where we were in July of last year. But look at, I know everybody talks about the 200-day moving average line that's right here at 217. I don't care. The moving average line, believe it or not, is actually still rising, so you can break it and it's not a big deal. But 215, we have not been able to break 215 since last fall. We're coming up on 6 months of this.
And you know what's crazy, Helene, is you're showing these pockets of the market that have been going sideways, yet the S&P still is holding well above 6,000, right?
That's exactly right.
Yeah.
That's exactly right. But I'm showing you what's acted like garbage.
Yeah.
Relative to all the stuff that's up, right? So this is what I'm watching. Look at the transports. Again, how many times have they come down to this 15.7 area? 6 months. No break. Now let's talk about what can't break out. Look at the banks. Everybody all of a sudden, when Mag 7 started to diverge and they weren't so great anymore, and you couldn't just come on TV and say, well, you know, I like the Mag 7, everyone decided they liked the financials.
Right.
But are you making any money since November? No.
Right. Right.
And they had the chance, they keep getting the chance to break out, and they keep failing. As a matter of fact, if you squint real hard, you can see that Friday took out that deep seek low back in early February. So, you know, the good news on this chart is that people are finally selling their winners because they have money in the banks. And when they sell their winners, you know, they're getting a little scared. But again, look at the chart. Does this say to you, oh my God, I have to buy this?
Yeah. Not unless we see that wedge bottom trend line, you know?
Right? I mean, I think if you came down, you filled the gap there at 130 on the bank index and you'd be tagging that line, you'd be like, yeah, baby, let's take a look.
Why not take a flyer here? Because your risk is
Right.
managed.
Right. But even at that, my point is we're not breaking down. We're not breaking out.
Yeah.
And now you take a look at the Qs. Same thing.
Right.
Maybe the Qs didn't make their high in December. They made in November, but they made them in December. And again, they kept trying, they kept trying, they kept trying. Everybody got excited and boom. So that's what I'm watching, oddly enough. Look at software. The group everybody got all excited about. They couldn't even get back up to the old high. But here we have this 100 level on IGV. It held in November. It held, see, in November it held at the deep seek low, it held here, and it's here, and we've got an uptrend line. So I don't even care if you break and you come down to the January low, that's fine. But right now, we can't even break 100.
Yeah.
So to me, that's the market we're in, is they sell them when they're up, but somehow or another, the selling dries up when they come down.
So, Helene, here we are, as you're pointing out, all of these ranges that we're dealing with. What's going to break the market out of the malaise at this point?
Oh, you want me to give you a reason?
Yeah,
I,
come on, tariffs. Is it the tariff man? It's got to be the tariff man.
I have no idea what'll break them out.
Yeah.
I wish I knew, but if we knew, it would be priced in.
Yeah,
So
right.
therefore, if we break down, it's going to be some bit of bad news nobody knew about. If we break out, it's going to be good news nobody knew about.
Yeah.
Because right now, this is the market we have had for pretty much almost 6 months now. I mean, all
Yeah.
right, maybe in some cases it's 4 months, but
Right.
that's why I call it a chop fest. It just can't look, this morning, they took them down, they tried to break them, and then they take them green.
Yep. And this is we're filming on Monday, February 24th, just for
Yeah.
everybody's knowledge.
So in other words, there's no follow through on the downside, but there's not a lot of follow through on the upside either.
Right, right. So the next chart you brought, you want
Right.
you looks like you're bringing something a little bit different. Tell us
Okay, so
what the
this
McClellan Summation Index is.
it's a breadth-based indicator.
Okay.
Okay. And despite all those terrible charts I've just showed you, right? Take this, to me, this tells you what the majority of stocks are doing on the New York Stock Exchange. And if you take a look, that entire chop fest, you had the big decline in December, we all remember. But despite that, think about what's gone on in February. February, the range has gotten almost even more narrow. And this hasn't really rolled over. It's exhausted. It did roll over on Friday. And if it can't turn itself back up, that's problematic.
So that means that sentiment is going to get worse.
Well, if this turns south and picks up any steam, that's probably going to be because all those charts I just showed you that were at the lows are breaking.
That makes sense. Okay.
But, as long as they're not breaking, this is, it's got no life.
Sure. Okay. All
So
right.
that's, I mean, some people might call it a rotational market. If you take a look, I mean, Pepsi is up 10% in 3 days on no news. Kimberly-Clark has had one down day in, I think, 11 days. I mean, it's just a rotation. They're out of the momentum names and into the defensive names.
So to scare the market out of rotating to where it becomes more of a, cash is king market. I know I just asked you this, and your answer is going to be like you don't know, but is that going to be what, when we stop seeing rotation, is that going to be your signal that says, look, one of maybe a few things, look, maybe it is time to actually see some downside follow through because you're not getting the rotation any longer.
Right. And you'll see the lack of rotation because this indicator will turn down.
Got it.
And keep going down. Right now it turned down on Friday, but will there be follow through today? I don't know, because when we got on our call here, breadth was barely down.
Yeah.
So
it's recovered.
And the RSP, the equal weight S&P, was green.
So you said you referenced the RSP. Is the RSP, the equal weighted S&P, something that you look at quite a bit?
Well, I look at breadth, and the two are quite similar. So yeah.
Yeah. Okay.
And they tend to go hand in hand.
Right.
So, but my point is that's your rotation. If
Sure.
they go back into the momentum stocks and the technology narrowness, this will turn south, because the money, I don't get the sense that there's money spreading out. Everybody, thinks we've got money spreading out into all these other areas. I think it's either or. Like, in other words, if Nvidia catches a bid, you can be sure Pepsi's coming back down.
That makes sense. Yeah.
And so I don't think it's like they can't all live together.
They all can't rally together, right? And then
Right.
that's
And I
the
don't
problem.
know why, considering how much money has been poured into this market.
Yeah. So
But somehow or another, they just can't all live together.
did you bring any other charts after this?
No,
Okay,
that's
so this
it.
is it. So yeah, so let's talk. Let me ask you a couple of questions then about rotation and actually I'm going to share a chart of mine really fast and ask you a question and let me do it this way. When you're talking about the markets and you're talking about rotation and everybody's just kind of sitting waiting for the market to break one way or the other. What you see here is you see that this is 10-year, this is the notes market, and we're starting to see, this move higher in fixed income. You've got the 10-year
Yeah.
moving higher, 30 years starting to move higher, yields are starting to come down. How much of a concern is this to you when you're seeing everybody's a bond bear or fixed income bear. Everybody believes that the
I'm not.
okay, well then, how much influence do you think this is going to have?
I think everybody got way too bearish down here. I'm assuming I don't can't see the dates on here, but I'm assuming that's January.
Yeah, that this is February 10th. This would be the middle of January, January 15th or so.
Oh, okay. So
Yeah.
that's where everybody got way too bearish.
Yep.
And then they got bearish here again. And if you take a look, excuse me, you have a little left shoulder, head, right shoulder, although
Yes.
head and shoulders bottom,
Yes.
okay? And you don't really, I mean, you have a little bit of that setup. If you had a longer term chart and we went all the way back, you'd see that I think it's the October 22 low in bonds will look like the head of, there you go. It's not exactly perfect, but left shoulder, head, right shoulder. I think the right shoulder is I think it's too low to really be considered that.
But it's still like a basing pattern, isn't it?
Right.
Yeah.
And if you look at this, so my presumption has been that bonds are in an incredibly wide, here we go again, an incredibly wide trading range. And that that call it 3.5% or whatever we saw in here, and the 4.5% or 4.6 or whatever it was here, 4.7, that's probably the range we're in for the time being.
Yeah,
And
so
that's
you can
probably why stocks are doing what they're doing.
So you can look at yields here, and this is your yields, and you're discussing this big huge range. What could potentially happen at this point in time is we see a move lower in the 10-year. Now, if that happens and you see 10-year yields drop, and that means the bond market's rallying, that could be a sign historically that we have some risk aversion, right, Helene?
Well, usually when bonds rally, people are more apt to put money in the market, because there is no alternative, as they say. But from my perspective, I see bonds rallying, staples rallying, drugs rallying, utilities rallying. That's all part of a defensive posture in the market.
Right.
But I don't want to say that means technology can't rally, because quite frankly, we've seen plenty of times where rates go down and technology rallies. So
Sure, sure.
I just think that when rates are rising, it's very hard for the 493 to make any progress.
Oh, okay. All right. Well, the 493. The S&P
Isn't that
400.
500 minus 7 is 493?
All right. Well, with just taking it all in and everything that you've talked about, before I let you go, I want to see if you can wrap all of your ideas up
Chop.
for traders. It's chop. What should we be looking for?
I think late February, early March is rocky, like we've seen here. Yeah, up, down, up, down, up, down. But with a lot more volatility, I would say, than most of what we've seen. And aside from that, all I see right now is just a giant chop until we start seeing breaks down or breaks to the upside. It's just hard. And I think if you go to sentiment, I think you have the same thing. When a market keeps doing this and it keeps jerking you up and down, up and down, up and down, it's hard for sentiment to be too bearish or too bullish.
Right, right.
And I use overbought and oversold oscillators. Well, they can't get overbought or oversold when there's no momentum in the market.
Sure.
They just chop. And something's going to have to come along to change that. And I think if you go back to that McClellan Summation index that I showed, if that keeps rolling over, the likelihood of the breakdown rises.
Well, those are some very wise words, and I'm sure everybody that's listening in is going to take that one home with them. So, Helene, I've known you for years and years and years now, and I cherish these few moments we get together because your knowledge and your depth of knowledge is so great for traders to get. What's the best way for traders that are learning about you to follow your work? And I know, let's talk about Twitter for a second because that stinks what happened to you. Let's talk about Twitter and let's talk about Prothestreet.
Okay, so I write two daily columns at Prothestreet. One concentrates more on individual stocks, and one is just on an overall market. So you can find me there. And I do a Saturday chart fest on Substack called Helene Substack, and I literally just draw in lines, and you can see that there. I am on Twitter, where I used to have my own name, but somebody stole it. And so I am Chartfest1 now. And then I am on Blue Sky under my own name,
There you go.
Meisler.
Very good. Well,
you can
Helene,
find me anywhere. I'm everywhere.
yes. And for those of you that just remember on Twitter or X, Chartfest1, correct?
Correct.
I know, and that's a new handle, and it took me like 2 months to figure it out. So I'm glad that I can help get the traders back over following you and and all of your infinite wisdom that we love is from a technical point of view.
You see a post from Chartfest1, you're like, who is this clown in my feed?
It took me a while, and I was like, oh, that's Helene. So anyway. Helene, I tell you, like I said, I appreciate the time that we've had. For those of you that really appreciate this, make sure you give Helene a thumbs up. Jump down in the comments below if there's anything that you're seeing that maybe you agree or disagree with what Helene's saying. And then, follow us on this YouTube channel. And this way you don't miss any of this exclusive content. Helene, thank you so much for your time. I do appreciate it. And all my best to you and Ken. Tell Ken I said hello as well.
Thanks so much, Blake. Good to see you.
Good to see you. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.